What's up, guys? Hope you're well. This is basically like our first course, I would say. Don't think we've actually done like a full course on everything, like a basics from like learning market structure right up to learning, strategies. So this will be like our first course that we're actually making. Hope you guys understand it. Watch this course multiple times if you need to. You know, take your time. There's no rush. Some people they just buy these courses or whatever, and they get into the course and they just watch it, and they don't understand everything. You got you got to watch it multiple times, right? So I'm not gonna waste too much of time with this course. I'm gonna go over the basics. I'm gonna go over show you the guys the strategies as well. So firstly, you guys know that I trade off fair value gaps. Right? Fair value gaps for me is what has gotten me my best results, right? So most of my entries are taken off fair value gaps. I don't really like taking entries of, order blocks or let's say rejection blocks or whatever. Those are for me. Those I keep that aside. What I do like is, of course, my fair value gaps, my inverse fair value gaps. Those are what I look at. All right. So first things first, guys. We're gonna go over something called market structure. Now, market structure is basically how the market moves. And the market will move in three ways. Okay, you have, let's just get this. Market will move in an uptrend like this, right? Basically, in the uptrend, we are creating new highs, new higher high, higher low, higher high, higher low, higher high, higher low. So we can grab our text tool. That's your higher high, okay? Right there. This is your higher low. Right? Perfect. Higher high, higher low. Higher high, higher low. Higher high, higher low. Right? Similarly, in a downtrend, we also have you have market structure will move like this. Basically, it moves like this. Creates a low, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Okay. So now we can take our tool and I'm just going to write this up for you guys. Lower high, lower low. Perfect. Let's draw lower low quickly, 1 second. Okay, so this is your uptrend. Now this is your low downtrend, and of course we also have consolidation. So the third way the price moves, basically it's moving between two price points like this. And that's a consolidation. There isn't really any movement in the markets. Okay. All right, let's just look at a few examples here, right? Look at this few. Let's look at the market here. Just stretch this out a bit. Okay, you'll notice the markets already. Guys can see what are we in? We're in a downtrend. Okay, look here. Right, let's just look at this any point in the chart here. So I can take our tool. You'll see markets moving down, then up, creating the lower low right there. Lower high, lower low, lower high, lower low, lower high, lower low, lower high, and so forth. You guys understand, right? That's basically what the market's doing in a downtrend. Okay. Let's look for something in the uptrend. Here we go. Here we go right here. We got lucky here. Right? We're creating higher high, higher low. Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Right? That's basically your uptrend, okay? Market will move like that. And remember, market's not gonna move straight in a straight line. It's gonna move all funny. It's not gonna move just like how I drew in those pics, in those drawings up here. There's a drawings off. Look. Okay, market isn't just gonna move like this, right? It's gonna look a lot more uglier than what it looks here. Okay, but that's just a representation of what we're looking at. Okay, now this is just the basics. Let's look at more. Let's go in more into it. Right now, this is your market structure. Right? I showed you 3 ways. Now let's look at the next term that I want to show you guys. The next concept that you guys need to learn. It's break of structure. Basically, break of structure occurs when we basically create a new high. Simple, guys. We break off structure. So we had, but basically this was our high point right here, and we basically retested and we broke above there. When we broke above here, as soon as we broke above here and closed, we say this is a break of structure. Okay, if market just wicks this area, okay, a lot of times market will just wick it. That's just a liquidity sweep. Okay, so important that you wait for some sort of favor candle closure, then okay, then you could say that's a valid break of structure. Even then, I don't personally take trades straight off a break of structure. I wait for some retest into a fair value gap, then I take a trade. Okay, okay, right. Let's look here again. So this right here, let me just put a smaller line here. Abo, the flip. What happened there? The magnitude is too strong. All right, so right here is your break of structure. So let's mark this out. BOS, break of structure. Right. Similarly, here's your break of structure. When we broke above, created a new high here. You can see we had a break of structure, created a new high, retested, created another break of structure here, pushed up again, retested, created another break of structure. So with higher high, higher low, break of structure, higher high, higher low, break of structure, yeah, higher high, higher low, break of structure. That's basically what happens in an uptrend. Okay, so as soon as we start breaking, continue to push up higher, we are now pushing break and structure. We basically break in structure. We broke structure and we continue going up. Okay, yeah, again, let's see. So if I look, let's look here again. There's a trend line tool right here. When we broke below here and retested, right, this right here became your BOS. Broke out, retested, broke out here again, break of structure. Right, we created the lower low, lower high, lower low, break of structure, lower low, lower high, broke out from here, break of structure. Okay, that's simple, guys. This is so simple. Okay, that's your break of structure. Now, if I look at the chart here, let's look at the chart. Actually, go on to this too much noise on our 50 on our 1 minute. Let's go on 15-minute time frame. Right. Okay, so you'll see there's a lot less noise on the higher time frames. Right. Okay, so you can see we're in a downtrend. Right, lower low, lower high. Then we broke below here, break of structure, lower low, lower high, break of structure, lower low, lower high, break of structure. Okay, so you guys get the point what's happening. Lower low, lower high, break of structure. Right, it's very simple, guys. Very simple. Okay, yeah, okay. Now this is where it gets interesting. Okay, now how do we know when the market is shifting, right? So you guys understand what I'm saying about break of structure and understanding the trends. You guys should understand so far now what's happening. You guys should be following. Okay, let me just look for a bullish example here, right? Let's just look for a bullish example. Bearish quite sometime, right? So here you can see we created the high, and then with this one candle here, we created the low. Higher high, higher low. When you broke against up the end, say we created a break of structure here. As soon as we close above your break of structure, here again, we broke above this previous high here, break of structure. Okay, again, we We created the high and the low, break of structure there again. Right? Simple, guys. Simple, simple, simple. Next thing, like I said, now how do we know when the market is shifting? Okay, so let's say, for example, market is moving like this, right, in the uptrend. Right, and then we close below this previous low right here. Okay, so higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then what happened here? We didn't complete the, we broke below the previous low. Okay, so when we close below here, and of course I want to see a closure, it can just be a liquidity sweep, continue pushing up. Okay, so very important that you see for that candle closure. Okay, when you get the candle closure, then it's confirmed. Okay, then you just wait for a retest and you get your entry, of course, and then you can obviously this is all on the, you're gonna look more on the 15 minute. Try not to look on the 1 minute too much. 1 minute, I just use the 1 minute time frame for an entry. Okay, that's where I look for my entries, on the 1 minute time frame. But try and use your higher time frames. Use the 15 minute, use the 1 hour, the 4 hour, to basically get your direction of what the market wants to do. So I use usually the 1 minute time frame, and I pay it along with the 1 hour, right? So I pay it along with my 1 hour time frame, and also my 4 hour time frame as well. But mainly I use the 1 hour time frame, and also the 5 minute time frame. The 5 minute time frame is very, very important for me as well. 5 minute and the 15 minute. So the 15 minute is usually if I don't find that high, that I don't find that entry of the, I don't see a 1 hour FEG inside, then the next thing I look at is of course my 15 minute. So I'll go through the whole process of what I go in, how I look for trades, but let's just continue with this. All right, so we created the higher high, higher low, higher high, higher low, higher high, higher low. Then what happened? Broke out, break of structure, sorry, not break of structure, market structure shift. So this here, okay, mark this out here, market structure shift. Okay, so usually what will happen here is market might come back here, and then it might basically come to a retest on your lower time frame, and then it might continue pushing down. So just get this. Okay, so that's basically a market structure shift. When you break below a previous low, higher low, and we break below there, and we continue going down. Right, so this is what we call a market structure shift to the downside. Okay, we shifted structure to the downside. Now, in another example, if we're gonna look at your upside, basically, market moves like this, right? Creating straight higher. Let's say, for example, market's moving like this. And let's say, for example, this market decides, just push this. Okay, so we were in a downtrend. Right, we created lower lows, lower high, lower low, lower high, lower low, and then we broke above this previous lower high right here. Okay, we broke above this previous lower high, and now we'll say that this here is your market structure shift. So let's clone this quickly. Okay, so that there is your market structure shift, right? So all this here, all this while when we were creating new highs like this, we were doing, we're basically breaking structure. We had break of structure here, break of structure here, break of structure here, break of structure, break of structure, break of structure. Then we had a market structure shift. Okay, yeah, again, simple example. You could also, market will basically, you can say market could even reverse from here, right? So market will basically, when we close above, let's say if there's a high here, so when you close above this high here, you can say basically that's your market structure shift. Okay, so this is like a simple example. Let's just go and let's look at examples like this, right? So like I showed you guys here, here's this example here. Right, so we were in a strong downtrend. right? You look at the previous high. Where is the previous high? Here. We created the high here. When you broke above this high, okay, you'll say that's your market structure shift. But you're not going to just take trades. You wait for a retest and then you take your trade. You look for a trade, entry on the low time frame, and then you get a trade from there. Right. So once you close above here, retest, then you take your trade. Right. You're trending down, market structure, we're creating breakout structures all over, and now we pushed up. That's basically your trade there. Okay, that's okay. That's you could have taken the trade there. You're obviously going to go into a low time frame and get a precise entry. It's okay. Okay, there's not really any structure shift here. Let's see if I look for an uptrend to a downtrend. Okay, so we were in an uptrend. Okay, now in the market we had market basically closed below this previous low that we created here. Right, we created a low right here. We created this is the previous low. We could even say this right here. You can see this here. When we created this low here and we broke below it, okay, and we even came back to retest there. That's your market structure shift. So we were in an uptrend. We broke below this previous low right here. Okay, then market what it did, it came basically and retested this area, and then we dropped down lower. Right, that's simple, guys. It's so simple. Right. Let's look here. Okay. Okay, there's a gap there. I don't really look at that. Just see if okay. Okay, so yeah, we're in a strong downtrend. We pushed down, we basically pushed up there, and then we failed to obviously continue going higher. We broke up there. Like I said, you gotta wait for a retest. Even though we broke above here, you gotta wait for a retest. There wasn't really any retest, and we just continue going down from there. Then, of course, from here, we did push up. You can see we pushed up above this previous highs that we had created all over here. But all these highs, we pushed up against it. We retested back here, and then we went up. So you gotta always look for a retest of some sort, then you get an entry. Okay, so don't just take trades randomly. As soon as you see a break of structure or market structure shift, you don't just take trades. Okay, you gotta wait for the retest, which is very important. Right. So I think that's it for market structure. I think I went over break of structure. I went over market structure shift, and I did go over market trends. The market trends, of course, are your uptrend, your downtrend, and your consolidation. Those are your three ways that the market will move. Okay. So we're done for the first lesson. I'm gonna get into the next lesson. I will see you in the next one. But remember, guys, you don't have to rush with this course. You can take your time. If you don't understand anything, come back to it and watch it again. Okay, you gotta put in the work. Try and understand it. If you don't understand it, you're welcome to obviously message us and stuff like that. But try and understand on your own, and let's see how it goes. All right, guys, I'll see you in the next one.